Welcome to CovéaPod. I'm Sue Coffey, Personal Lines Director at Covéa Insurance. So in this podcast episode, we'll be talking about something that can be very topical at this time of the year, and hopefully high up on my Christmas list, which is jewellery. Now, obviously, it's a tough time for people at the moment, so not everybody's going to be purchasing jewellery, but they may well have jewellery that they've inherited or have had in the past. So I'm delighted to be joined today by our special guest, Mark Smith. Hi, Mark.
Good morning.
Morning. So, Mark, you're the Managing Director of Costell Associates, and you've been there, gosh, is this right? You've got over 22 years experience?
Yes, it feels like it's been a very long time, that's for sure.
Mark is an associate of the Society of Fine Art Auctioneers and Valuers, and he's got a BA in History of Art and Design. Oh gosh, you're well qualified for today, Mark, so thanks for joining us. And welcome to our very own Craig Jones. Morning, Craig.
Morning.
And Craig is Home Portfolio Manager here at Covéa Insurance. So we know times are tough. And not everybody is going to be out there, but we know that a lot of people are considering buying jewellery still for a loved one. And we know that people still do have a number of items of jewellery. So Mark, tell us about what those that are buying, what are the current trends? And if you don't mind, tell us what we should be thinking about in making sure that we've got the right level of cover for our jewellery.
Sure. Well, it's an interesting one. A lot of the things that I can only sort of comment on are the kind of things that we see with our clients. It's not, in terms of, I'm not that good at keeping up with all the fashion trends of jewelry, but it's certainly there's been quite a change in many respects. I suppose a lot of the things that one should mention straight away, of course, is diamonds. The synthetic market, is growing. It's growing year on year, and that's going to continue to be a trend. It very much seems to be fixing on the sort of the lower end market, but that along with the difficulties in obtaining certain stones of larger diamonds, so clients sort of very concerned. It's quite difficult to get that. Supply and demand being very important. Pearls are very in trend. They've gone from what were seen as quite old-fashioned occasional use, and now a lot of the big designers are promoting those quite a lot. And of course, the high end, the sort of the catwalk moves all the way down throughout the market and affects what people are buying. And gold, big gold items, statement pieces, very in fashion. And of course, the problem we've got at the moment is gold is an all-time high. So it's cost-wise is quite important. And I think that's why in terms of making sure you've got the right insurance in place, because it's very much a changing market.
Yeah. I read recently, Mark, a few facts that 60% of people never get their jewellery valued. And I think from an insurance point of view, 1 in 5 think that even if they have undervalued, they would still receive the full amount it's worth. Why do you think people are not getting the jewellery valued?
Well, there's always a certain element that clients are concerned about cost. As you pointed out right at the start, cost is very important, the cost of living. People are really thinking about their jewellery collections in terms of whether they keep investing in them, number one. But number two, they're concerned about getting jewellery valuations, I suppose. They're worried about premiums going up, of course. They're worried they may have to have a safe installed, for example. And I think that generally they're just worried that, the higher that things are valued, or indeed sometimes they're maybe even looking at the possibility of only insuring certain pieces. And there's a misunderstanding of the market and a misunderstanding how insurance works.
Yeah, and you see that a lot, I suppose, in your role.
We do. We see a lot of clients, the ones who do have valuations, sometimes they feel possibly they've been pushed into a little bit by brokers or recommending. Sometimes you certainly see clients who are very much, they know the importance of having things valued. Some clients are even asking us to, as I say, only value certain things when we're there. They look at it in a different way. But
Craig, what do you think customers should be doing to ensure that if, and we hope that these things don't, losses don't occur. But when a loss does occur, what do you think the customers should be doing, that the people should be doing to make sure that they are adequately covered and they don't get a nasty surprise, if you like, at claim stage when they've either undervalued or they're not covered at all?
Yeah, I think we touched on valuations and they're key to make sure you understand your sum insured. But I also think understanding the terms and conditions of your own policy is vitally important. So Mark touched on customers wanting to insure individual items or to value only a proportion of the collection. And I think what's really important is to understand how that would impact your insurance. So if your insurer is comfortable to exclude certain items because you don't want to insure them or you wouldn't claim for them, then speak to your insurer about that, but also understand how that would affect claim in those circumstances. So across the home market, it's common, for example, to have single article limits on some policies. That may mean that that's the value at which an item needs to be specified. On others, that might be the maximum value that it can cater for, and that can have a very different outcome in the event of a claim if you were to have a loss. And so that anticipation of a full payment might not be received by a customer. And in some cases, if it is a maximum value, it could invalidate the policy. So it is really important to understand how your policy would respond in the event of your collection or a single item of high value.
Yeah, anything, Mark, that you'd like to add? We don't want people to be scared of getting a valuation, do we?
No, and I think it's really making sure. One of the things that there's very much picked up on valuations in the last year is how valuers have said to me that the thing is you can't generalize across the market to say those stones have gone up or those pearls have gone down, etc. It very much changes from within. And I think that for me, it's not about selling valuations. It's about trying to help people and make sure people are protected. I often used to say to clients, the wonderful thing about a valuation is it will give you peace of mind and be able to sleep at night, and also make sure you've got the correct insurance in place. But the flip side of that is if a client ever had a claim, a valuation at that point will be the most important document they've ever had, because it just helps, that's the one time they don't need to be going to try and prove what they have. And they've just got something that will work perfectly for them. So it's, as I say, it's not just about the front end, it's about if there was ever a disaster.
Yeah,
and do you know what, Mark? That is, sorry, Craig.
I was just going to add to that. So I think as well, sort of as it can be a real benefit for you to have that valuation up front, as Mark says. So like our high net worth policies offer extended replacement cover where you have a valuation within a set period. And that gives you that greater level of comfort as well, because you've got that agreed percentage uplift on your sum insured in the event of a loss. So as Mark says, it can be the best thing you sort of purchase if you do have that loss, and give you that additional comfort and protection that you're covered.
Yeah, and what I was going to say there, and Mark, you explained and described that beautifully, because our role in the insurance industry is to protect people and put things right in the event that things do go wrong. And, we haven't often got control on that. And this is just one of those elements where you can create peace of mind for yourself, and we can ensure that everybody is adequately protected. So at that time of need, it makes that whole process so much simpler. They've got the adequate levels of cover, we've got that valuation, and we can deal with putting them back into the position they were before as soon as possible. So I think you wrapped that up lovely there, which is exactly what this is about today. So thanks both for your time. Getting valuations, I'm hope, is on the top of everybody's New Year list, and just creating that peace of mind, not having to worry, so that if the unfortunate happens, it can be as best a situation as possible because you're adequately covered. The insurer can deal with the claim and hopefully put things right as soon as possible. So thank you, Mark. Really appreciate that, those top tips and advice, and that great piece of advice about those trends and changing values. Definitely is a good thing for us to bear in mind as well. And checking your policy, Craig, totally makes sense as well. So thanks both. Have a lovely Christmas. And on your New Year list, guys, sort out your insurance. Make sure you've got no under insurance wherever you can. Thank you.
Thanks.